sicher verstanden.
Also, I'm going to value Swiss punctuality and slowly start the session with all of us. So, is it 1:15? We agree?
I'm not sure about my watch. So.
Okay. I'm very happy to have this session with these three very experienced founders, and I think the ones that are here, you should utilize it well, because we're going to talk about a very, very critical topic to make your business successful. So before I start, maybe a short introduction. My name's Isabel. I'm an active angel investor and also have built something, but I didn't build it with VC package that became profitable. And I think like finding product market fit is always very tough along this journey, and these three founders are in the middle of it or have done it before. So we have Laurent. Laurent, you have built a startup, sold a startup, and are now actually also supporting startups with Holy Code that are building software. And then also Can has built a startup, sold a startup, and now is working on Norm, where he had a bit more difficulty finding product market fit than the first time round, and you will talk about the journey. Laura, it's your first rodeo. Mm-hmm. I think you've been doing it for
4 years.
4 years now.
4 years.
Yeah, but also fun fact, dating app that she got venture or angel money for that now turned to total offline dating. So we're going to talk about interesting pivots, interesting product market fit talks. So the stage is yours, and I wanted to kind of start and feel the room a bit so we all get an understanding what we're talking about. Like, what does product market fit mean for you, and where do you stand now with your current businesses in this process? So Laurent, we're going to hear it from you first, because we're all curious.
Yeah. Well, I mean, product market fit, everyone has a bit of a different definition of it, which we also figured out when we were talking about it before that hand. So for me, it's usually a mix of having a certain growth in revenue or top line, a certain amount of usage, active users or whatever it is that you're measuring, and a certain churn rate that is flattening, like a retention curve that is flattening, meaning that you have a certain set of people that is really willing to stay on your platform. And if you have these three things, then I think you have product market fit. There's also other ways to look at it, but that's the simplified version of how we look at it. And that Holy Code, I think we're just going through like the fourth repositioning of the company to make sure that we have product market fit also going forward, because as a software company, in the times of AI, everything is a bit crazy right now. So yeah, I would say we're in the midst of finding product market fit again.
Again?
Yeah.
Okay. So that sounds like a good journey you're on. Now, I had the pleasure to have Laura and Can on a panel yesterday at our collective gathering around this topic. And Can, you shared that actually, I thought that was interesting that Norm is in the product market fitting validation at the moment, and you did in your first one not even have to pivot, what I thought was interesting. You just had this lucky punch to have the right hunch to have the right customer. Could we talk about the Controvista journey first this time? Because I haven't heard it for the product market fit, and then where you stand on it with Norm.
Yeah, no, so I mean, it's not, we also pivoted with Controvista, but there it was like the classical pivot from, we started with our own problem, the idea, with the B2C idea, and then we pivoted to B2B, and then that worked. So it was a quick pivot, but like the whole idea, the client group stayed the same. And yes, as I said yesterday, there was, if you have it like that, then in my opinion, it has a lot to do also with luck. If you just with the first idea you hit something that gets traction, but I think most of the time it's not like that. And yeah, we experienced that with our second startup now, that we had an initial hypothesis. We tested it, and then at some point we had to say, this is not working, and then like Pivo, not so much product wise, but like target group wise, and maybe also like to come back to the definition. Like I think about a bit like if you're B2C, then it's about like organic growth, like word of mouth, because if you manage to reach that, then you have some kind of product market fit. and B2B as we're now. There, I like to think about like if you have a product that you sell to a business, and then you would take the product away again. If your clients scream that they want the product back, then I think it's a good sign for product market fit. And now with Norm, we're in the journey to get there. We're not there yet, but we want to get there.
And maybe, what does Norm do, or do you guys all know what he's up to now? No. That would maybe be interesting to understand, because you explained a bit what the whole
we digitize real estate buildings for big asset managers.
Okay, that's quick. Yeah. One sentence, perfect. So I think when it comes to the definition of product market fit, I think it's way easier for me to say what I feel like it's not a product market fit than do it the other way around. So we started with an online dating platform, online business, and when I first heard about the term, I remember we also put it on our very first pitch deck. We had a slide where it says we reach product market fit. And it was because I thought, we got it because we have our first traction. So in the early days, I thought that's product market fit. I realized it's really not that simple. So now I would say product market fit is not if you got your first traction, but also it's not if your traction stays the same. So this is why we pivoted a few months ago to a completely different product. We do now events in the real life. So we skipped online dating, we shut that product down. And because we did it, because we realized we do have traction, but the traction stays the same over a long period of time. It doesn't grow anymore. So there again was the realization, okay, even though we might have a lot of traffic, but it's not going anywhere, that's another sign of not having product market fit. Yes.
So when we're thinking about this, and this is also where I'm going to ask you in the audience to get some of your questions ready, because I have some lined up, but I'm going to be turning towards you soon. We have you have all these great experiences on how you've been figuring out what product market fit is or what not, right? I mean, you referenced now some kind of curve. I'm simplifying it a bit, but this realization of having like metrics is in place that you can measure it, I think comes with a bit of building experience, business building experience. I think probably the first time around with Movu, were you clear about metrics and how you're measuring product market fit? You just thought, oh, we have a lot of customers now and it's
not
floaty boaty.
Yeah, we had.
And maybe you have to explain what Movu did the first time round too, if you don't know their first business.
I mean, Movu was a digital moving platform where if you would move from one place to the other, you could get offers for your move and your cleaning, and then book it through us and have a move captain, as we called it, assist you through the process. And before that, we were doing e-commerce. So, all of our metrics were tailored from the e-commerce times. And I think until we sold the company, I've never heard of the term product market fit in 2017. So I came quite late to it. So yeah, we just stumbled along, and we had mentors that were helping us a little bit, but that term just didn't come up. I don't know why. And I think it's also partially because we just had very quickly a lot of traction. So I think the product market fit discussion was out of the room relatively quickly. We were just lucky that we were in an area where it was very clear what the demand is and why this could work. Yeah. So I think that's probably why it didn't come around. But then, yeah.
So you didn't really have to have a hard sit down with the team to actually redirect Movu. That didn't happen. You guys, okay.
Not really.
Sounds like you both had some lucky shots when it comes to product market fit in your first time.
Yeah, I mean, it's a bit a similar experience as you had. We didn't go from B2C to B2B, but we went from, let's say, a lead platform to afterwards really a full service booking engine. Yeah. But it was clear from the start that we wanted to go there. It just took more time because AI wasn't around to build that platform. Yeah. So yeah, we were just lucky in that sense.
So right now, you guys both took more conscious decisions in building like a product market fit metrics for you. At least I have heard it from John. Mm-hmm. Now, John, why did you think it was important when you founded Norm to actually have some kind of framework? Maybe you explain a bit the framework of finding this product market fit and that you sit down with the team and also discuss this very consciously? Because you were lucky the first time round, so why address it heads on in the second time round?
So I was lucky the first time, but then I also invested in a lot of startups, and there I saw that not all founders are so lucky, and I think like the first phase of the startup, that should be the only topic, right? How do we get to a stage where we have some kind of a product market fit? But there are not so many. It's not such a topic that is discussed much. Of course, there are books and so on, but you should really operationalize it and track it as a founder. And then we looked around and we found a good framework that we used for B2B market fit. Which you has different stages. You define KPIs, and I don't think the framework is so important. It's more important that you have something where you define some KPIs, and then you go back from time to time and really track. So we plan to do this. How are we doing? And most important, to have some kind of a decision metric to say, hey, this is not working. Because I think that's the biggest danger I see with early stage startup, that they are so locked into their idea because they sold it to themselves, to the investors, to the employees, that it's very hard for them to say this is not working. And that's why I think some kind of a framework with metrics helps you to have the hard discussion with yourself and your co-founders to really say, is this working, or do we need to change something?
And who in the room is a founder? It always helps. And who has views at earlier stage? Okay, so did you ever think about product market fit much yet? A little bit. Okay. And who of you is an investor? Yeah. So I have some questions then for you. And who of you is a facilitator? Okay. So we have it all in the room. That's good for us to know. Because I think product market fit can also be taught like wrong or right. So it's always interesting when we build these frameworks and teach these frameworks. And I remember you showing the slides in the preparation call. You mentioned them briefly, but again, if we would like operationalize Holy Code's product market fitting strategy, how does it really look like in your day-to-day business?
For Holy Code, we try to keep it as simple as possible. Yeah. So we measure the Net Promoter Score of the customers, because as a service company, at the end of the day, that's the only thing that really matters. Yeah. And obviously, we measure the pipeline speed. So how long does it take to convert leads into paying customers? Yeah. Those are the only two things we measure, because we can measure a lot of, the only two things we measure in terms of product market fit. We also measure a lot of other stuff, but you can get lost if you have too much data. And every case is a little bit different. So for a service company, that's what we look at. How long does it take to close? Mm-hmm. Because the longer it takes, probably something is wrong in the way that we're selling the product or the service. And then also, how high is the happiness of the customer? Because that's the best engine for growth. But at Mobile, we would at the end we had a different set of KPIs, and I think you have a more elaborate set of KPIs in Norm as well. So I think it really depends that you find the right one for your kind of business. It's not one size fits all.
Yeah, and I know, at least from Laura, that you had a very interesting KPI. So if we look at dating, we're churning all the time. So we always have a negative churn. Happy couples leave, ciao, bye-bye. So again, we couldn't use the same KPIs as Laurent is using. But what is maybe the way that you've established to measure, are we doing it right in our dating world, or are we doing the wrong thing? Because when I kind of know the story a bit, but when you started, it took up... The growth curve was, like I said, it was scaling a bit, and then we just flattened out, and also on the app. So walk us through your thoughts of how you did the KPI measurements at the beginning and what you're looking for at the moment.
I think one framework that really helped us was the one, I don't even know if it's called Product Market Fit Survey, but I think you know it as well, where...
It's from Sean Ellis, yeah.
Sean Ellis, I didn't know even, where you ask your customers 4 questions, and the first question is, how disappointed would you be if the product doesn't exist anymore tomorrow? And then they put in very disappointed, a little bit disappointed, and not disappointed at all. And then you have 3 follow-up questions. And what that one taught us, firstly, I think the metric is if 40 or more people say they would be very disappointed, then you have around product market fit. We didn't have that, so that was the first learning. And the second one, but which was probably way more interesting for us and important, was that it tells you that afterwards, if you look at the answers of the users that filled out the survey, you just cut out those that said they wouldn't be disappointed at all. You just ignore what they said in the follow-up questions, because the follow-up questions are like, what would you wish for in the product and so on. And that really taught us that, because we always had the problem, we said we're talking to customers so often, we had a really engaging conversation with our customers all the time, but we always said it's so hard to figure out because person A says this, person B says the exact opposite, person C another thing. I don't know if that's especially high in such an emotional industry like dating, but that was always the biggest struggle, that we had so much feedback, but we couldn't do anything with it because it was so different. And for that survey, that really helped to focus on the right feedback, to focus on one customer audience that you built the product for, and because the other ones are already customers, so it's a bit funny to cut them out and ignore them, but it really tells you that you have customers that if you listen to their feedback, you would probably go the wrong direction, and you can't even listen to all the feedback. That's the sad part a bit. You really have to cut out some people, because otherwise you're just lost all the time and you're doing different things to different directions.
And there's like really the funny tendency in dating, right? So when you were building the app, there was more men on the app. On the offline events, there was more women. So also, I think each product that you introduced on the market,
yeah, I mean it
was like very confusing.
Yeah,
we were always like looking at
women and feedback from men. That's a totally different thing when it comes to dating, right? So we can't just take any feedback. We always had to look at who actually gave that feedback. Is that person female, male? Is it what kind of age group is that person? So that was really hard, and it's still very hard to prioritize the right feedback. I don't know if you had the same struggle.
I mean, I was just thinking about, in B2B, because both my companies are B2B, but you have a similar thing where you like when you start off and you go out and you try to sell your product, you shouldn't expect everyone to like it. And if someone does not like it, you should really just say thanks for the feedback and not talk to that person again for a long time, because what you're looking for are the ones that really get what you want to do. And per definition, if you do something that wasn't done before, it will not be the whole market. It will just be a very small subset, and your task is to find those, and then with those references to show and grow the market. But if you would do something that everyone says, hey, this is great, then probably you would have a huge amount of competition, and it's probably not so new. So I would say it's a bit of a similar dynamic where yeah, it's not good. So you should ignore the ones that and not try to convince them.
That's the
and you should also maybe not sell too hard.
Yeah.
So I just thought about it. You should probably, if you would have the best salesman in the world, pre-product market fit, it's not a good thing. Because this guy would maybe sell something to someone that they don't want, and that's not good, because you really need that signal that it's not working for that target group.
Yeah, and I think, John, you highlighted something. So there's like a different world we live in, pre-product market fit and post-product market fit. And because some of you are pre-product market fit, probably. Do we agree? So what is like recommendations or things for founders that are now pre-product market fit? What should you be focused on in your day-to-day business? Because often we discuss that from VCs, bless our hearts, you get the advice for like post-product market fit startups. I like that point, right? So maybe let's dive in a bit to what's the difference there. What do we need to look for pre-product market fit, especially for the early founders in the room?
You're still searching, right? I'm simplifying it a lot now, but pre-product market fit, you're searching, and post-product market fit, you're executing, right? Yeah. So this is two very different stages. And then at some point, you will get to the point where you have to find product market fit again, because your growth flattens, you've captured your market, whatever. So then you have to start over. But in general, before you're searching. So you're searching, as you said before, you're searching for the fans of your product, the people that really get what you want. You're searching for what kind of people are those so that you can replicate it and make it a scalable go-to-market approach. You're searching for the places where you can find those people. You're searching for the answers of which features you might need to add on top of this. So it's all search everywhere. And I think the only way to really do that is, as a founder, you need to speak to the people directly. So a great sales guy in the beginning is, I think, actually the worst thing you can do, because everything you would learn about the market, you learn filtered through a salesperson. So you, as the founder, you have to go and do it yourself. I mean, I just talked to Jerry from Paymira, ex-Bexio founder, and he said, yeah, the first 20 customers now for Paymira, it was again him that had to go and get it, because he understands it, right? You need to be the first salesperson. You need to make sure you narrow it down, you understand your ICP, your ideal customer profile, you get what they need, and then you can start implementing repeatable sales motions and go-to-market approaches. But
And so also you guys got your hands dirty again.
yeah, now again. Like, if I wouldn't be here today, I would be talking to customers again.
Okay. And let's maybe go into this notion of this investor expectation. So we kind of call it the hockey stick growth, but a lot of times when you as startups go out there and pitch, you're pitching something that maybe isn't true. So we have to kind of pitch, oh yeah, we found product market fit. And how does one kind of navigate that reality as a founder? I mean, you had a good point yesterday that you said, just be honest with them. How was your pitch with Norm was pretty interesting towards investors. But I think you had a unique situation that you could pull it off that way.
Yes. We told investors we don't have product market fit, and our only task and goal is to find it. That means we cannot tell you now what exactly we will do. But that's not how most of the pitches work. And what I saw a few times is that if you pitch it too hard, that you know exactly what you want to do, you have market fit, product market fit, you have growth, but you know you're not there yet. But then you pitched it, and then that person invests in you and joins your board. From day one, you have this disconnect where you need to do those things, but the expectation from your investor would be that you would do the other things, right? The post-product market fit things, and that leads to a tension that is not very healthy. But I mean, I don't have the perfect. I would for sure say, try to be as honest as possible. But if you're just a first-time founder looking for money, it's also hard to go out and say, yeah, we don't have product market fit, give us money. So I think it's a bit of a tension that probably stays there, but I would for sure try to be super honest, because you want your investors to know exactly where you are in the journey and what the tasks are that you need to focus on. And I think it can be super toxic if you're pre-product market fit and you start scaling the team, like looking at other markets and stuff that you would do post-product market fit, because then it's impossible for you to be flexible enough to really go and search for the real product market fit.
But we do this so often, I think, with Switzerland,
yes.
no?
That's what I mean by this pattern matching of investors that never built the company by themselves. They see the startups that are working. That means post-product market fit. They look at what are they doing, and then they go back to their pre-product market fit startups and tell them, do those things. And that's the worst advice you can get.
But it also probably depends very much on the investor. We had the experience when we first fundraised that if you talk to a business angel who has maybe built their own company, they get it immediately. If I would have bullshitted them with we have product market fit, they would have caught me right on the spot and be like, let's be honest, you don't have product market fit, because they know it from their own experience. We did a crowd investment for the second round, and there it was the complete the other side, because those people, usually they've never invested in a startup. They maybe don't even know what a startup really is. So they invest in the idea. They feel like, oh, that's a cool thing. So that I found was way harder and tricky to be like, we have to convince them, of course, and we believe in the idea. But on the other hand, like, do you now explain them the whole thing of like, maybe this is not product market fit, then they don't know what product market fit even is. They've never heard of it. So there I found it was way trickier, but we, like with business angels who has done their own startup, I feel like I was way more honest because they knew immediately. And with other investors, especially crowd investment, it was more about really selling the idea and then taking the risk that if you would pivot, they would probably be more pissed about it and don't realize that that's a thing that can happen within startups. With VCs, I don't know, it's probably you need to have closer to the product market fit.
Yeah, I would suggest VCs after product market fit. And pre-product market fit, you need to be really transparent with them, I think. Because if a VC invests in you thinking you have product market fit, the expectation is to take this money and grow.
Yeah.
And if you do that while not having product market fit, it's really like a recipe for a disaster.
And how can you afford this search phase as a founder if you don't take up money? Or how long was this search phase, or was this fast for you all?
I mean, as you said, it's probably business angels that are the ones that understand this and can give you the money. But in the search phase, you need to try to keep your costs as low as possible.
Yeah.
Exactly. Stay very small, very low burn, and try to prolong the phase that you have with that.
Yeah. And so how long was it for you? Do we have any realistic time guesses?
I mean, there were it's probably a while ago, but there were studies that always said you need 3 to 4 years to find product market fit, right? So that's from the idea inception to when you're there. In the case of Movo, we were lucky; we were much faster. Dine Deal, I would argue, never had product market fit. So yeah, Bexio, I was only there much later. I think they were also really fast in finding product market fit. So I think, the early 2010s, if you did a digital product that hit a nerve, you would find product market fit faster. But for everybody that didn't get it on the first try, I think it was more 4, 5, 6 years even until you could hit product market fit. So the average doesn't really tell you that much, because I think it's more of a spread in between.
Yeah.
So, but I think you will need 3 to 4 years to find product market fit. And everybody now says with AI everything goes faster. I don't believe that's true, because you can build technology faster, but you're not going to be faster at talking to your customers, figuring out what the processes are, getting them to stop working with this other vendor. All of these human parts, you just move the bottleneck to another part of your chain, right? But I think nothing systemically changed in that area, in my opinion. So I still think it's probably around 3-4 years.
I think that's important that if founders know it, that it takes so long, because usually you become pretty stressed because you think you need to have product market fit super fast, and then you get even stressed out because of that, and you probably take the wrong decisions, and you're not realizing that it's also normal that it takes quite a long time to find it.
Yeah, I mean, the faster the better, but easier said than done, right?
Absolutely. And I think it's interesting but I want to does anybody already have some questions? Because I'm going to start taking some. Okay, here we go.
Okay, here we go.
And maybe introduce yourself.
My name is Adrian. I have to say I'm an investor in Neuland, and so my question to Laura: how you did it quite a big pivot, and how hard was the sell
Not the real question. Sorry.
You said the tokenized investors, that they assumed product market fit, that they might have been pissed. I mean, I didn't ask any questions. Maybe others. How was your exchange with the investors?
We just had the General Assembly on Tuesday. That's why.
Yeah, that's true.
Yeah. So you were listening. Yeah.
I think it's really it's just the realization that investors can be so different. But then again, we kind of knew it. If you go into a crowd investment, you have to know that those are like people that never invested in a startup. Usually they also do, it's funny kind of, because they have lower investment budget. So sometimes it's 500 or 1,000 francs, but they are way more invested because they just don't know the game that well of startups. And then you have the business angels who have done this many times. So for them, it's just normal. And then they don't ask questions about it. But again, I think we try to keep it as transparent as possible also with the crowd investment, because I mean, if you lie to them, that's not a good idea, I think, but you can also not take too much time in explaining everyone. I feel like that's a learning that we had overall, that we tried to explain to a certain amount, but we wouldn't like take meetings and call with every single person to try to explain to them why we're doing certain decisions, because you just don't have time to do that as a founder, especially if it's like 400 shareholders. Like we should be doing other things. And that's probably the most valuable argument. I always tell them, I can take a call with you and explain to you an hour why we're doing this now, but you want me to work on other things. So it's better for us too if we don't do that and we just try to figure it out and actually work on the startup and not trying to explain to everyone in detail. Yeah. So I would say it's just so different to the persona of the investors.
And there was maybe like the hidden question that I thought was, for like more experienced investors or people that were following your journey closely, it was pretty clear for a lot of us that going offline was the route. And I remember calling you before the runway was super tight and saying, Laura, I think you guys have to just now sit down. They had some information from a other small boutique consulting firm that was very specialized on you, and make the decision, do we turn off the app or not? And it's a very hard one as a startup, because one is expected to scale, and scalability comes much better from anorganic digital growth, and going offline kind of changed this whole metrics. But I think it's interesting question, right? And you also got all of Laura's information. And I think one thing you did well, in my perspective, we were always informed of the journey. So in case we had interest to follow, it kind of was, you communicated it well, in my opinion, but I'm very biased. So,
I would say it's transparent, but take cut when you feel like you take too much time in explaining investors what you're doing, because that's really not a good thing for the company if you spend too much time on doing that.
At Moval, we had 40 investors, and I think after the second round, when we had like 30, I told my chairman, look, man, I'm not going to take a single call from investors anymore. It's over. You can do that from now on. So, and then he had to, right? So he was talking with all the 40 investors. Luckily, he was good at that. So, but I said, look, as you said, we have to focus on the business. I cannot explain the same things.
Okay, then I tell you to do that now.
Okay.
That worked.
Thank you, Laurent, for nothing. That will be terrible. Actually, I did it. I funded you. You maybe saw it in the chat. I took one question. So do we have some more questions for the panelists? Please, really, it's a nice round where you can just be honest, or also tell you where you guys have problems with your business and product market fitting. What are you thinking?
Still looking for the money on the first round. So.
Wait. It's interesting because you joined a bit later. The message was originally that maybe looking for money at this point could not make sense. So maybe you can explain where you stand and why you think looking for money is the solution. Because we can reflect on it. I don't...
So your question...
A short introduction, like where you stand in your product market fitting, and probably your pre-product market fit.
So I am CEO of a medtech startup that developed a new generation of teeth aligners, which are the first innovation for like half a century in the orthodontics, because devices are the same for half a century now. And we already have MVP, and we were able to survive with grants and money we invested, a bit of very brave investors that gave us some money. And now we are at a point where we realize that I thought it would be super easy to bring more investors and to close the round, and it's not the case. And why we need the money? Well, in our case, it would make no sense because we have a lot of technology development. So the barrier is still quite high, and we can do pilots, but we will not get recurring revenue. So we will not be able to prove any traction if we cannot achieve this level of funding. That's our reason.
So this is typical Swiss deep tech. Actually, it's interesting because our panelists are not deep tech entrepreneurs by default. But how would you approach product market fit in his case? It is interesting because we do have a lot of this. Also, you must have some in your investments. No,
Yeah, so-
John is like, I don't touch that.
Then I can also add something, which is that what we do is extremely hard because we try to send a new category to a market that is super conservative. You know, dentists, they don't want to lose their reputation with their patients, right? And so it's like big picture, big vision, but then we need a lot of money. And now the business angels are more like, okay, you can send an MVP, so continue to sell your MVP, show some traction, and then we will go there. But it's not the right approach because we have a vision which is above that.
But
And it's very hard to find the right investor now.
I mean, I'm not an investor, so probably the worst answer from my side, but I will give to Laura afterwards. But I feel like you need something to give to the investors that shows them that there is any need in the market, and maybe that is signed contracts or pilot projects that just show you've tried to do something on the market, and that shows the investor that there's really a need for it. I feel like that's often something that investors are missing. They don't see any proof that there is a need, and proof can be anything. It could be traction, contract signed, I don't know. In our case, it was an email list, like people signing up for the product. So anything that shows that there is, best case, a big need in the market.
Yeah, I mean, the thing that I see most working in these deep tech cases is pre-orders that are not paid yet, obviously, but pre-orders or at least letter of intents. But, you know, you're talking to dentists, right? And the letter of intent is more for, you know, bigger topics such as, I don't know, antibiotics, sending robots to power plants that cost several $100,000, you know? So there, usually it's these kind of metrics that you're saying to show investors that there is something, and then you still have to hard sell it. That's the hard part about it, right? It's if you do a digital product and you can survive as two people for a while until you have enough revenue traction to show the ARR growth, that's just a simpler case than actually building a physical product that needs iterations, and every cycle is super long, and it's you have to go to China to get it again. And, you know, I mean, those cases, they just take more time, and usually they're very capital intense. So you need to find a way to sell it to investors. I don't know how, but that's the hard reality of deep tech, yeah. Yeah.
I'm on my way.
Yeah, good.
So it's maybe also interesting. Does somebody else have a question or input? Because I think you can really use us for this. Yes, please.
My name is Jörg. I've been involved in 2 Swiss startups with Comram and Appway. And this is like a 16 years journey. And what I just think, and I'm really interested in your view, because I think if you say, hey, pre-product market fit and post, is this really the truth, right? Is there like this milestone that you achieve? Because my view is like there's so many variables that change in the market, and in the end it might be symptoms like NPS or whatever.
What is NPS?
Net Promoter Score, like what Laurent mentioned.
Yep.
And yet still, there's so many things that change constantly. Mm-hmm. And so how do you tackle this? And I think, also for us is like arguing, now we have achieved it, let's now tackle the next stage of our company evolution. But does it really exist, pre and post?
Yeah, you're right. It's a good point, because it's not really like a switch that just goes from you don't have product market fit to you have product market fit, right? It's a scale. Also, what you said before with the Sean Ellis survey, if you have this 40% of people saying they're very disappointed, you're not going to get there overnight. This is a gradual thing, and you might be getting above it, and then because the market changes over time, you might be coming back down. With Holy Code, that's exactly what happened to us, right? We've had a Net Promoter Score of 60 plus for a while, then it went down to 20, then we had to make adjustments of the company quite heavily, then it went back up to over 60, now it's again on 30, so I know we have to now change something again, because the market is changing, right? And the thing is, it's changing ever faster, especially in the digital environment, and that's what I think a lot of people get tired with currently. Also here, when I talk to founders today, every second person is telling me, I have to reinvent myself again after a year. I think that is really tiresome for a lot of the people. And that's why I think at the end of the day, you have to be in a business that you're really passionate about. Otherwise, you're going to burn out. But you're absolutely right. I think it's a scale. So it's not 1 or 0. You're getting closer to product market fit. You have it and you can scale. And then it goes down a little bit again, depending on where you are. And the cycles are getting much faster in digital products.
Mm-hmm. But in my view, I think it's not something you can just measure numerically. I agree, But I think it's one of the most important tasks of you as a founder to have the gut feeling of when is that point. And I do believe that you need to do different things when you're looking for product market fit and when you decide now this is the thing, we focus, we double down. And those are two completely different modes of working in a startup. And I think you won't have the numbers that you can put there, but it's the job of you as a founder to decide when that moment is, and then you need to do different things. That I believe.
Where do you feel more confident or comfortable as a founder? Are you more like the search guy or more the execution guy?
I would really like to be post-product market fit. I think pre-product market fit is always a struggle. But if you're doing it with good people, it's also fun in terms of if you make progress. But if you ask me like that, I would really prefer to have product market fit and then just focus on scaling the company.
Because there are founders that are actually really just better at being pre-product market fit, at doing this search, this interview, right?
Being better is not... I mean, I don't know what I would answer you. But what I would like from... I think the feeling as a founder is way nicer when you have something that everyone wants than when you're like looking for something that...
Okay.
But do you think you need to do both, or you need to take in other people once you have product market?
I think that's a very important question to ask yourself as a founder. Is like, there are guys that are just better suited to being pre-product market fit. That, you know, I admire the guys the most that can do this. That the ones that can go and find product market fit faster. You know, Jerry from Baxter, he's an extremely good executor, but I think his superpower is finding product market fit. This guy's incredible. So I think when he's done that, he should just leave Paymira and start the next one, you know, and have someone else execute it for him, because this is really something that he's just better at than most of us.
Oh my gosh, I see Jan and Jeremias founding number 3. I know.
So yeah, I mean, I think it's not everyone. Executing it's the nicer feeling because you know you're on the right path, probably. I fully agree with you, but a lot of people are not made for that as founders, in my opinion.
And there's,
just a very short question. What do you think, like, I'm now living from grants and so on, and I think I have to be very fast to decide whether it will go on or not. Just a general thing, like what's faster really? Is B2C really much harder to reach the product market fit than B2B?
Maybe you can explain a bit what you do, so a bit more that helps them or helps me too.
So I'm working in weather tech. We are exploring new ways to better forecasting fog. And the original plan is to work with B2B services. So we have a project with Rega at the moment. But of course, we also will need a platform. And I'm also in contact with other people that believe that we should go all in on the B2C platform, and we still can maybe later on rely on B2B partners and stuff like that. And I think it's still an open question for me. Coaches tell me always it's much harder B2C, and
but that's Switzerland.
Yeah,
but that's Switzerland.
So what's your opinion on that? That would be interesting for me.
But you did both, right?
No, I just did B2B, and I think B2B is easier. But I would argue it's easier B2B than to really scale a B2C business. But the price is bigger in B2C if you succeed. I would, but where I would advise you is just do one or the other. Don't try to do both.
And already decide this product market fit, right?
I mean, you can change. You can try one and then see it's not working, and then try the other. But I wouldn't try both in parallel.
But B2C is quite risky, right?
It depends on, I think you have to find a way to calculate it backwards in the sense of what's the customer value that you will get out of each single customer, right? And in B2C, usually the customer value that you get of each single customer is very small. So you need to get to an extreme amount of customers. So there's either you go viral, which is very hard to strategize about, right? It's going to happen or it's not. And if that's not the case, it's going to cost you a lot of marketing money to actually be able to grow that base. And then you really need to understand how you can afterwards monetize that. And if you're doing this out of Switzerland, where everything is more expensive than if you do it out of, I don't know, let's just say France, then it's a very tough climb as a Swiss company to be a B2C product. We have a very small market. It's fragmented in different languages. You have to be international very, very quickly, and you're always at a cost disadvantage out of Switzerland, unless you're doing something that is so super high tech that all of your competitors also will have an extremely high cost base, right? So because of that, I think B2C out of Switzerland is very difficult. Always.
I love the pep talk on B2C.
Well, we have more. We have more B2C founders. You all have a bit of B2C experience against.
Then maybe also the feedback that you get, like, are the B2B clients more excited about it and really get a need and a solution from it, or the B2C ones? Like, or is a B2C client really excited and would pay for it, and where you get the better feedback?
I mean, at the end, the question is not what is harder. The question is only where do you find product market fit, and that. But yeah.
So I have time for one final question. Are you going to give it? Do you want to? Who wants? Who wants to take it? Okay. Okay. Fire question. Fire answer.
I apologize for being super late, and maybe I will ask a question that everybody already has a response for, but. Could you, I don't know, give like your shortest definition of a product market fit?
I like that. Good closing round. And maybe some shots of advice with it.
Well, that's the question we started with. So we can
close with that. Okay.
But for me, like in your logic of B2C and B2B, B2C, it's exponential organic growth. B2B, if you have a product that if you take it away from your client, they will scream at you.
Perfect. Thanks. Any more to add? Oh, sorry, guys. It's me. I'm the walking.
I would say, if for B2C, maybe if you build a product that a lot of people would pay for as well. Like, I think that's something that B2C founders also, they don't focus enough on it. If someone would pay for it.
You mean pricing?
Yeah. No, because it's always with B2C, yes, you can also build a B2C company that's really big, and then you have a different pricing model where companies pay for it, like Meta or Instagram or whatever. But it's just very seldom that it happens. So also in B2C, I think for what people are paying for is such an important metric that a lot of B2C founders don't focus on.
Yeah, it's the same as I said in the beginning, strong enough client growth, user retention curves that flatten, and profitable unit economics on these.
I think we're all tempted to use product market fit way much early, because you're right, product market fit is something you can demonstrate with data. And we are all tempted to say, we'll demonstrate product market fit. And it's true that it's good that you say that, thank you. Now it's very clear.
Yeah, we actually looked at that. You really are the fun one, because that's what they actually said. It's really a misconception between investors and startups. But I will thank you all for the time that you took to explain this, and we can take the rest of the questions offline. So a round of applause for you three.